Macrina, you'd mentioned loans. What type of loans did you start with? Because there are a lot of different types of, you can get HELOCs, you can get traditional mortgages, you can get auto loans. Where did it begin and where's it going?
So I don't know if everyone's familiar with HELOCs. Hopefully everyone is, but it's usually like a second lien mortgage on your home value. If you've been through a HELOC process, and I actually personally have been through a HELOC process before I joined Figure, it it's exactly like getting a mortgage when you buy your home.
It's brutal. It's like a root canal.
Yes. Takes a lot of time. You still have to sign a lot of documents. You literally have to give away all of your personal information to be able to get a loan. It takes over 45 days. I think for me, it took close to 60 days. So it took a really, really long time. So when you work with Figure and the ecosystem and the origination system that we built, you can get pre-approved within 5 minutes. So you enter all of your information. You should try your app if you haven't already. I did that as part of my interview process to see, let's see if it really works. So you enter all your information, you get an offer, you're pre-approved, and then you give all the documents that's needed, you upload all of that, and you can close a loan as fast as 5 days. On average, it's about 9 to 10 days. And mortgages, HELOCs included, have a rescission period. And so that is the reason why it's a little bit extended than if you think of a personal loan.
Just to go a click deeper, where specifically do you think the system is bloated today that causes over a month?
I think it's because there's a lot of people involved in the process. And if you're familiar with how mortgages, traditional mortgages have been originated, there's a process that is required by Fannie and Freddie because most of these mortgage origination companies, they originate a loan and they want liquidity behind the scenes. So they would be selling to Fannie and Freddie, who would then sell on to these loan buyers at the end of the day or securitization vehicles. And so when you're following the process, it says, please look at the pay stub. So then, everyone has to download a pay stub. If you don't have a pay stub, then get the tax documents or W-2 or tax filings. And these are all manual processes and humans are reading through. We use a different process where we are connecting to something like a Plaid behind the scenes to read your direct deposit bank account and see that there is constant inflow of cash coming into your bank account. And we know that's your paycheck. That takes very little time. But if you're having to hire someone, look at documents, validate it, upload it, that just takes time.
And part of this, it sounds like it does translate into the profitability and the financial performance.
So if you're a fintech company, and this is just an example, you could also be a mortgage lender as well. Me being part of a finance company before, a consumer lender, there were two things I worried about the most. It was credit and liquidity. Credit is, how do I build my underwriting box so that I get the users, borrowers who are going to pay me back? And then the second part is, so where do I get the money to fund these originations? And is that going to be a bank? And usually banks don't lend you money to do that. So you're going out to buyers who are given like a forward flow agreement. So if you produce, you're going to be selling to this buyer at a certain price. Or you could become a securitization sponsor yourself and go through all the rating agencies, have all the track record and proof, and then go out to find different types of investors. So those are the two things I would focus on the most as a CFO at a consumer lender or a fintech. And what Figure brings to the table really is, we're giving you an origination system. It's white labeled. You can come in as a fintech lender, new person. We have a origination system that anyone can plug into and you bring the customers. And the marketplace is amazing because there's people who are sitting there waiting to see these loans come onto the marketplace and they're able to buy the loans as well. And it's all possible because of the loans being originated by the same system. So we call that homogenized and standard. And, all of the loans that Figure originates go onto the blockchain. So the blockchain technology, you can actually trust the information on the blockchain. It cannot be double pledged. So if party A is buying the loan or if party A is lending to the loan, party B won't be able to get access to the same loans. And you can see all of that information on the blockchain, which is what makes us more efficient and transparent. And the loan buyers can also see the performance of the loans once they buy these loans because it's on the blockchain. If there is payment, you don't have to wait for a servicing report to come from a third party that tells you client A paid you or client B did not pay you, download the loan tape daily and literally see the loan performance, which also makes the whole marketplace so much more efficient.
As a CFO in an emerging industry within the larger fintech industry, which you've been in for a while, what risk have you become more sensitive to over time as you've scaled?
The overall partner, whether it's coming from, the seller or the buyer on the marketplace, like who you're working with, the trustworthiness, the payback risk from each of these different types of companies that come onto our marketplace would be one. The other thing is, because I've been in the blockchain industry for a long time, you always have to think about the security risk of what you're doing and how that is going to be safe for everyone involved. And then at the end of the day, I do also look at overall macro risk because fintech, you're in the financial services industry. Like, where is interest rates? Where are interest rates heading? Is that going to go up? Is it going to go down? Where's the credit? Where is going to be liquidity of who else is really going to lend into the market, buy the loans, etc. Are some of the risks that I always pay attention to. But nobody really taught me how to do that when I first became a CFO. So it's really hard.
It's so funny. I actually said the same thing to Michael. We talked about risk for a while, and there's no CFO school. And even if there was, I don't know how they would build a curriculum on this. There's no way that you learn out of the box. Like, these are the risks to keep an eye out for, and these are the situations in which they commonly arise.
I agree. You make a lot of mistakes, and then hindsight is always 20/20. And so you tune and readjust and be flexible and make changes along the way.
Most finance teams aren't underperforming. They're actually under-equipped. The problem isn't the people, it's what they're being asked to do. Because there are two kinds of finance work: the kind that moves the business forward and the kind that just keeps it from falling flat on its face. And too many finance teams are buried in the second kind, and they call it a good week when they just get through it. Expense reports that take longer than the trips they cover, spend policies living in PDFs that no one reads, a 3-day approval process for a $40 receipt. That's a lot of burritos, but not worth it. Month-end close that stretches into weeks. These aren't edge cases, they're the default state of finance at most growing companies. And the cost isn't just the time, it's what your best people aren't doing while they're buried in the wrong work. You become what you spend on, and right now, too many finance teams are spending on maintenance instead of momentum. And that is why I use Brex, agentic finance that captures receipts automatically, enforces policy before the spend happens, and closes your books in minutes rather than weeks. So your finance team stops spending on maintenance and starts spending on momentum. 35,000 companies like OpenAI, Coinbase, Anthropic, and DoorDash already run on Brex because high-density talent deserves some high-leverage systems. It's time to get Brex AF. Can't believe they let me say that. Learn more at brex.com/metrics. That is brex.com/metrics.